Hey guys, welcome to another episode of Vegas Talks. In this video, we will talk about new concept known as ESG investing. I'm sure you must have heard about this concept either through news channels or other platform. There was an article in Economic Times about this concept and a lot of people were trying to understand this concept, so we thought to make a video where we will try to understand what ESG investing is and how it works. We will also try to understand why it is so important in today's world. So let's start. ESG stands for Environmental, Social and Governance. A company is called ESG compliant if it satisfies all the conditions of environmental, social and corporate governance benchmarks. So basically it means all the companies has to comply with new norms set by regulators which falls under three categories, mainly environmental, social and governance. So let's talk about each of these factors in more details. First factor is environmental. Environmental factors makes it important for a business to adapt greener or environmental friendly practices while operating. It will help in sustaining the resources for the future generations. As per SEBI, environmental related disclosures cover aspects such as resource uses like energy and water, air pollutant emissions, greenhouse emissions, transitioning to circular economy, waste generated and waste management practices, including biodiversity. Then comes social, and it basically means how the company manages its relationship with its employees, customers, suppliers, and communities altogether. It also includes CSR activities conducted or exhibited by the companies, especially for social welfare. As per CV, listed entities will have to make disclosures on social impact assessment, rehabilitation and resettlement, corporate social responsibilities, among others. And last but not the least is governance or corporate governance. It is the foundation on which the company is judged. It means that the company should be transparent in its action and treat all its stakeholders fairly and respectfully. And there should not be any unethical practices. SEBI says in order to give time to companies to adapt to the new requirements, the reporting would be voluntary basis for financial year 21-22 and on a mandatory basis from 22-23. However, companies are encouraged to adapt early. We all are aware about the Paris Agreement on climate change, which our Indian government has already signed. So basically, there are new benchmarks set by regulators which we should consider while making an investment into a company or stock. I'm not saying that now we should avoid looking into fundamental aspects, but as per SEBI, maybe we have to look into both of these aspects before investing. So ECG will act as a new parameter or guidelines which will rate listed companies. As per SEBI, ESG will be applicable on the top 1000 listed entities by market capitalization, and this move is expected to buy in greater transparency and enable market participants to identify and access sustainability related risk and opportunities. A study compiled by MSCI Research found that the companies who did well in ESG factor had a lower cost of capital. Lower cost of capital means company can easily raise fund from the market either through debt or through equity. And as you are aware that raising fund is an important aspect for expansion. There is also a stat shared which shows that Nifty ESG index in last 5 years has performed better than Nifty 50 index. Nifty ESG has given a return of 14.91%, whereas Nifty 50 has given 13.6% CAGR annually. So all in all, you might see this term being used most frequently and companies are rated as per ESG. I hope now you are able to understand this concept and you can plan your future investments accordingly. In our next video, we will try to find stocks which have been top rated as per ESG compliance. Till then, thank you for watching this video. Do like, subscribe and share this channel and don't forget to hit the bell icon.